Hey, this is the Profit with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Profit. Hey, hey, you talking to the Profit? Hey, hey. We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them house roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Profit to get some profit, we couldn't change the top. If it's a stock and I need a cop it, I wait for him to drop it. Ain't no option, let's get it poppin', we chillin' in the trap. I need some crypto, put it in my pocket, by any means I rock. This is the Profit with Nick Black, it's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks, this where you get that. So go and grab you a nice chair. It's time to sit back and talk to Profit. Hey, hey, you talking to the Profit? Hey, hey, you talking to the Profit?
It's fake news.
It's all fake news. It's phony stuff. It didn't happen.
Jerry V. Hall, everyone. Jerry.
Hey,
JVH.
good morning, Nick. Good morning, brother. And shout out to Kickboy Triple and to Jeff and Chip from On the Chain for making that incredible opening song happen.
Jeff. Shout out to Jeff.
Whoever made that song, whoever got that Kickboy Triple tune to be created, whoever did that, thank you.
Shout out to Jeff. One of the two between Jeff and the other one is a dick. So shout out to Jeff. Oh, man.
I just love your opening tune, dude. Best in the business.
It's fun. All right. Let's see what's going on. Well, we've had some prices go up, some prices go down, all sorts of fun stuff. We'll talk about that. We'll talk about AI NFTs. What the F? What the NFT? We will talk, of course, we're going to be really talking about debt and leverage since we had to dump the old show because too many profanities. So we are going to go back into debt and leverage. We didn't really get into debt and leverage the way we wanted to last week, did we, Jerry?
No.
So we are going to get into it. So after our price discussion, which we're going to keep to about 10 minutes, we're going to get in. We'll do 2 to 3 minutes of the new 503 gateway error. I mean, a new AI project. I mean, a thing Mark Cuban's invested in. Oh, it's all the same thing. It's dumpster fire. It's a cool idea, though. And it'll probably do good if someone else does it and Mark Cuban's not involved. Unfortunately, he is. So let's see. Who do we have? Kind of a thin crew over on the Theta. So we'll go through them first. So we have Jasnot, Antonio. That's it. That's it on Theta. It may not be reporting. We'll see. We have over here, Jim, Brady, of course. What's up, Brady? GSRC videos. Right on, right on. Tiffany, Trey, Scott, what's going on? I get that a lot. Antonio in the house. Antonio, are you live on the Chubb house as well? Belinda Cook, good to see you. Nesh, Cassandra, hello, good morning. Yolo, ¿Qué onda, Joe? Ella Paul, Plu. Who do we got? Suze, what's up, Suze? Expat Matt. Michael Murphy, Bobby. What up, Bobby? Ryan. Belinda on both sides of the fence. Tom. Okay, good. And Spirella, CC Brown. All right, cool. Two-Tap Pipeline. I don't know where you got that name. When every time I read it, I feel like I've committed a hate crime. But, or maybe a sex crime. I don't know. But, all right, fair play. She probably works in the oil and gas industry, and that's a completely innocuous term in that industry. But not anywhere else. Okay, and what else? Yeah, that's about it. Okay, let's go to our commercial, non-commercial breaks. Jerry, real quick. We always have closing thoughts. What is our opening thought?
I'm trying to structure something to say after the break.
That's not an opening thought.
No, my opening thought is, wow, we've had this kind of, dude, it's been a renaissance in this space on so many levels. And, we haven't had red in a week. Now we have a little bit. and most likely that'll pick up steam. It just, things are incredible. That's my opening thought.
First question is, Aisha, who's that? Second question and answer is surfing in Hawaii. Ah, that's what the pipeline meant. It wasn't a reference to like Rod Stewart and the gerbil. Okay, and on that, you know that story, Jerry?
I cannot confirm nor deny. That was something circulating as I was a child.
Yeah, if you're from California, you know the story. You know the story. And on that note, we will serenade you with our commercial, non-commercial break, and we will be right back. All right, let's get right to the fun. Throw us a like if you just feel like giving away free stuff. Give us a free like. You don't have to do the paid version. Just give us the free version. We make nothing from it, but we won't swallow a whole bunch of Oxycontin feeling depressed and sad that everyone hates us. Oh, wait, we won't do that because we own Cardano. What? All right. Let's take a look and see what's going on. So for many of you, prices have been a little weird. Prices went way up. They just started retracing. They started to retrace a little bit Sunday. They bounced. And this is really, most of this is Bitcoin pivot. But let's take a closer look. The Bitcoin is 48,000. It was about right. It was just whistling, kissing the teent of 50K yesterday. It's down 2.3%. So we back out. Whenever you guys are looking at this, as a general rule, back out Bitcoin's price action to get an idea of what everything else is price action, right? So for all of you home gamers that are answering in the chat and you're awake, if Bitcoin is down 2.3 and Ethereum is down 2.5, what is Ethereum really down?
.2.
.2, bro. It's down that .2, bro. So always back out Bitcoin's price action, because what you're doing in the space is you're saying, because if we agree that Bitcoin is a quality asset and it's a store of value, we would like to build that. And if we want to build that with higher velocity assets, then we want to make sure those assets are higher velocity. So we always have to back out Bitcoin's price performance to get a better picture, right? It's like you back out real inflation to get an idea of what, nominal means. So same thing. So if we back out our Bitcoin, Ethereum's barely down, still way up on the week, as is Bitcoin. So Bitcoin's up 5.6 in the week. Is Ethereum's up 1.5. So let's go to Cardano. Cardano touched 297, I think, yesterday, and it's moved really far, really fast. Some would say too far because nothing's changed. Nothing has changed since 2 weeks ago. We still know that on the 1st, smart contracts roll out for the testnet. On the 12th, Cardano smart contracts roll out for the rest of us. That doesn't mean on the 12th, all of these new companies launch their products. They will be talking about it at the Cardano Summit, that's for sure. Also, I'm waiting for one specific thing. Jerry, can you read my brain? Can you read my brain box?
Most likely, if it isn't to do with a new car you're adding to the stable for LA Exotics, it's DeFi on Cardano.
Yes, I'm waiting for DeFi. To me, that's the biggest mover. I was looking last night and I put a little tweet. Out there. Ethereum moved from about 300 and change to 4,300 and change, on some exchanges higher. And it even settled at 3,300, which is basically 32. It's down a little bit from last night. But so meaning it did about 1,100%, anywhere between 1,100 and 1,400% move. So 11 to 14x in the time that DeFi started leveraging Ethereum. So if DeFi was good on Ethereum for a 14x, what do you guys think? And again, there's no answer to this. This is a philosophical question because none of us know, and there are no real metrics for a brand new product that's being launched on an asset that just now released smart contracts. There's really no metrics for that. All we can do is speculate. I think it's probably good for a 4 to 5x because it's a lot of tokens taken out of circulation. What are your thoughts, Jerry?
Well, I agree with you. Here's the one quandary that I keep coming up with. Cardano has got a fixed supply. ETH doesn't. And how much float were we able to ascertain there was in the ETH, quote unquote, world at the time of this event? I have no way to go back and really look and understand. Cardano, I do, right? So we can actually start looking at real metrics right away. And I think that might be coming measuring tool that we use to analyze in the future because these factors are known. They're not unknown.
So to what Adam said, so Adam, that's one way of looking at it. I'm not actually looking at it because of fees generated through Cardano. That's actually not my speculation has nothing to do with fees. My speculation has to do with coins disappearing out of circulation and locked up and creating a kind of squeeze on the asset on exchanges so that, there's just less tokens available. And when people want to enter, the bid creates a higher price variance. So does the ask, right? So if you have people coming into Cardano and governments putting the on switch on their basically different parts of governance as a service, remember, very few people, we don't make absolute statements. Very few people are even considering DeFi on Cardano. It's almost like it's antithetical. It's like, oh, evil, DeFi, yucky. But that these DeFi platforms are going to leverage the cheapest fee structure available because it makes it easier for them to go out and pilfer people, right? If the fees are reduced, you might feel less stressed about going in and out of a liquidity pool. And if you're going in and out of a liquidity pool, then these DeFi platforms and swaps are going to come over and they're going to leverage Cardano. So no one's I don't think many people are factoring DeFi. I don't think many people are factoring Singularity Net and all the companies being built on top of Singularity Net that all leverage Cardano because Singularity Net runs on Cardano. Now, in the near future, every DeFi protocol that's worth its weight in dirt and everything is going to leverage every single platform. You're going to go where it's cheap and you're going to go where it's easy. And why wouldn't you? You want to make it easy for your clients. So you're going to have an Ethereum version, a Cardano version, a Polkadot version. If it makes sense to have a Cosmos version, you'll have a Cosmos like Fetch AI. Fetch is launching on Cosmos. Great. They're shooting their mainnet over there. So, near WebAssembly, that's kind of a different animal. But just long story short, everybody's going to be interoperable with every possible protocol that makes sense if there's not some high cost to offer that to the customer. Because why wouldn't you, right? You'll leverage everything. And so in a leverage every network, in a leverage every protocol type world that I think we're moving into, there are many winners. So I'm certainly not saying Cardano is the ultimate one. All the others, but I do believe that probably it still looks like Ethereum, Cardano, Polkadot as the top three, as the big dogs. And I think as we move down to Polkadot, let's talk Polkadot. we're not getting into price action specifically because you guys know what happened. Bitcoin sold off last night, and when it did, everything took a dump because it had been going for 6 or 7 days straight up. If you just look at Cardano, what it was last week, it's still up 31% on the week, 125% on the month. Those are big moves. So very similar move in, not quite, but Polkadot, it's up almost 100% on the month, right? 3.5 on the week, and 5 of that, it gave up 5 today. So it really only gave up 2.5. And so you'll notice, look at these smart contract platforms, very similar price action. The Cardano down 5.5, Dot down basically 5. Matic, it's almost a protocol, I'd say. It's getting close to that kind of stature. It's down 1.5 about 4.5 if we back out the 2. you're seeing similar behavior in similar sectors. And I think other people are starting to sectorize their portfolios. What do you think about the kind of the sectorization of the crypto space, Jerry?
I think it's going to become more defined the further we get into this market based off use case. What is it? Well, if it doesn't have like a specific use case, like an XRP or a VET or something, it's going to be, it's a layer 1 protocol. Oh, okay. I mean, if you can do anything on it, it's just going to be an open protocol. So yeah, I think there'll be sectors named, and there'll be names come up for things that we haven't even thought of yet.
The only other assets that I thought were quite interesting, and so I think Matic is interesting, and I'm going to give you some names, and I want to see, Jerry, you can't answer this because you probably already know where I'm going with it. You home gamers, tell me, do you know why I'm going to put these together? Matic, Near, ARweave, Graph Token, Audio, 1inch. Does anybody know what they all have in common? Anyone? Let's see if you guys can get this one, and then we're going to attack your stellar question. I want to know if anybody can put those together in a way that makes a little bit of sense, and you know where I'm going with this. If you watched the show on Money Map last night, then you probably know where I'm going with this. Yes.
Wait a second. You do a show on Money Map on Sundays?
No, today's Tuesday, bro.
Oh, that's right. It is. You're right. My bad.
Coinbase Ventures. Yes, very good. Those were all the ones that I just shot off are Coinbase Ventures. Coinbase is going to be putting, for those of you that don't know, $500 million of their $4 billion plus war chest directly into crypto. They have not been a net holder of crypto. They warehouse crypto in the normal machinations of working their exchange, but they were not direct investors in crypto until, not in a meaningful way, until now. They're going to put $500 million into the space, and every quarter, 10% of their quarterly revenue is going to go into crypto. So it's going to be the usual suspects. They said very specifically, we will own Bitcoin, we will own Ethereum, and other proof of stake assets. Well, go to Coinbase Ventures, just look up Coinbase Ventures, go through their list. Those are almost all of those are proof of stake assets, except for one or two. I think ARweave is, I don't think there's proof of stake for ARweave. But my point is, if they're going to put tons of money in the space, they're going to buy their book. Why? Because that's what everyone does. They buy their book. So if you got a big pile of cash and you go into the space, why would they not support their own assets? My guess is this is one of the reasons, because I think people were front running this, because again, Coinbase can't keep any secrets. And there's always people, insiders, that pre-trade things by about a week. You'll notice that about a week before this news came out, Near started running, Audius signed a big contract, Matic started running, ARweave started really, really running. Look at AR. It's up 224%. Nothing's changed about ARweave. Nothing is changed. It's the same thing as it was. It's a cool project. I'm not downing ARweave, but be honest with yourself. When you see, coincidentally, all of these things start moving and it front runs some Coinbase news where they basically say, we're going to buy $500 million of our own shit. You get what you get. So good for them, but it can be good for you too, because if they happen to also be quality assets, which I like Matic, I like ARweave, I like Audius. I mean, these are all tokens, and Near is a better version of Ethereum than Ethereum. It's already doing what Ethereum intends to do. So anyway, I just think that's interesting. So it's kind of like a high five to all of you that have invested in those assets for other reasons. Now you have yet another reason, in that every quarter there could be an inflow into these assets that you like. So if Coinbase Ventures has quality assets that you like, you might want to consider that. There's going to be a bid. There's going to be a constant bid right now and about 4 times a year. Bang, 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 bang. So there you go. Fun, right? And Crypto Gamer asked, since they're a public company, now won't we be able to see what they invest in every quarter? Yes, but you won't see it until after they've done it, right? If they invested, right before the end of Q1, they wouldn't have to announce that till the end of Q2. That's a big window. That's a long time. 90 days in crypto is like what? It's like dog years. It's like 5 years in any other market. So well, just remember 90 days ago, what were the prices of assets? It's so these markets move really fast, really hardcore. So keep that in mind, is that yes, they have to report, but they don't report in real time. Although I think in the future, as these companies start to digitize, go into the equity space, and they kind of transcend the equities markets and the crypto space, there will be real-time reporting. It would be interesting to see a real-time balance sheet. I don't know if we're going to see that anytime soon, because I think a lot of companies are like, they don't want people trying to front run their trades, which makes a lot of sense. But if we can get that reporting time down, now you can do some math. None of these trades are secret. You can see them after they happen. It's just connecting the dots. So my guess is there'll be some analytics firms that connect the dots for us, and they'll kind of like whale alerts. Yeah,
exactly. Somebody's going to say, hey, we can identify this wallet as blank, and then that's it. Forget about it.
The Coinbase investment wallet or whatever. It's like pew, 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 pew. So that'll be fun. Anyway, that's cool. Keep an eye out for it, because it's kind of fun. It's nice to have a bid in the market. And as much as I'm not a fan of Brian Armstrong, I am a fan of Coinbase. It's a very easy exchange to use. And as long as you do the shuffle from Coinbase to Coinbase Pro, it's incredibly efficient. So there's a lot of things they do wrong, but you know what? They don't steal. So that already puts them ahead of Binance. They don't lie and cheat and blow money on frivolous naming rights to sports stadiums like a bunch of dick bags. I mean, I'm not saying FTX. I'm not saying Solana. I guess I am saying that. Did you see that? Another, I don't know what, $17 million for some naming rights
of a college stadium.
Yeah. And like $300 to poor people. Here's like $300. You can eat tonight. But we want 17 million here, and we want 190 million. Dude, anytime a company is more focused on marketing than product, be vigilantly hyper aware that is a danger sign. That is the biggest danger sign. Most of the big scams in history, they were all marketing, zero product. So and they're even doing it now in Blockfolio. Be very careful about the news you read, because FTX owns Blockfolio, every third piece of news is, look how amazing FTX is. Look how amazing Solana is. They are not doing anything, dude. But it doesn't matter. It's marketing. And if enough people see it over and over and over and over, they'll just believe it, because people don't do their due diligence. So anyway, yeah, just be very careful. So I like Coinbase. I like Kraken. I like KuCoin. I like Gate. That's basically it. I like BITTREX, but it's illiquid. Okay. Was there anything else on here, Jerry, that you thought was particularly of interest?
Well,
anything exciting?
No, not well, I guess yes, sort of, kind of, in a stupid, selfish way.
Okay.
On a little exchange we both have used many times in the past over in Singapore, BitTrue.
Okay.
Are offering 12% on Theta in the Power Piggy.
Oh, interesting.
With a minimum 100 Theta to enter. 12%.
Is that a teaser? Is that a teaser rate? I'm guessing.
I don't know. I didn't catch the teaser. I was just there. I have some stuff on there in their Power Piggy stuff. I was checking it out one day, Sunday to be exact. Saw Theta for 12% and went, what? Immediately traded some shit to get the 100 minimum Theta and threw it into the Power Piggy for 12%.
That's pretty good. That's a lot better than the staking through Theta. So anyway, G-Thang, good to see you, Crypto Gamer. McNabb, Stress Relief. Andre, what's up? Let me just say, Unsung, hello. Osagro. JDSGC, Gordon Bennett, Biotech Breakout. I think I got everyone. Spirilla. Okay, cool. Having problems with Twitch. Oh, wah. I'm not going to view on Twitch. Okay. It's weird. It just puts this thing over. Give me 2 seconds. It puts it over my chat box. Edit, save changes. I didn't do anything, but If you're on Twitch, I don't know what to tell you. Sorry. Okay. Michael, JR, Surf Tech. Who do we miss? Patrick, good to see you. Adam, of course. YOLO, Patsy. I think we got everyone. If I missed you.
Did you get Trey Stroud?
Yeah, Trey. We got Trey. Trey was the first one to nail the Coinbase Ventures question. Okay. So let's reduce. We're going to go back. Let's get away from prices for a second. Let's go and talk about un momentito. Let's talk about this this AI firm that raised 16 million bucks, and let's see what's going on with it. Okay, AI firm raises $16 million to create NFT metaverse. So this sounds to me like kind of a Mana type play, like a Decentraland for AI NFTs. If that makes any sense, let's read. Developers are working on creating a world full of intelligent talking NFTs. Dear God. Now that sounds awful at first, but then you go, wait a minute. If they basically uploaded their brain box to the rig and the NFT, for instance, if I could have a Charles Hoskinson, an Elon Musk, okay, not an Elon Musk, a Charles Hoskinson and a Ben Gortzel NFT to converse with in real time, that would be super dope. I mean, I have the real Jerry, so I wouldn't need a JVH NFT. I just get the real one. But for those of you that don't have him on speed dial, how much would you sell your JVH NFT for, Jerry?
Wow. I don't know. I'm still a free market capitalist, so I'd let the market decide that value.
Fair play.
But I hope it would do well on the open market.
Look, those two robots, they're shaking hands. They're going to be like,
I hadn't caught this article, and it really is, with everything that is going on in quote unquote the metaverse. I mean, I'm seeing, I don't know if you've seen this, like iMeeting type companies, right? People are putting together video conferencing technology, are now overlaying it with animation so that you don't, like, you wouldn't see you or I, you would see our avatar.
That's good, because my avatar doesn't have any crow's feet. And mine aren't crow's feet. These are raven's claws.
There you go. But it's just like more and more and more of this quote unquote metaverse stuff keeps coming up. It just is, it's just amazing to me. It's so science fiction novel from when I was a kid actually becoming real.
Do you think those robots that are shaking hands are deciding how they're going to turn humanity into computronium and paper clips?
No, I think they're deciding which DEX has the worst code to exploit.
Yeah, so they're going to go after Binance. Well, probably FTX, then Binance. Interesting. Oh, well, they don't have to go after Binance. They'll just give them the back doors because it was designed to pilfer. What? Was that out loud? Okay. There's actually a whole story on Binance denying allegations of market manipulation. And there's an insider that says, oh, I've got a whole hard drive full of evidence. And they're like, and this is, whenever someone gets too vehement, like, Jerry, you're like, hey, did you eat my cake? And I say, I have never eaten someone's cake and I will never eat anyone else's cake ever. You would go, whoa, guy. I see where you're coming from, but methinks the lady doth protest too much.
Right.
So there's like, they're basic, but you know what they didn't say? They didn't say prove it. So this dude apparently is going to prove it. He's like, okay, cool. I'll just release it and show you guys. They're like, no, I'm sure he's extorting them internally, and I'm sure CZ will pay. But it doesn't matter. We all know it's a dumpster fire over there. Anyway, the world's first intelligent NFT was released by software developer Alethea AI this year. The chatbot NFT was later auctioned for $478,000. Now, big time investors have raised 16 million. Okay, two things. A, kind of big time investors, and B, 16 million is nothing. Nothing. All right. So let's not get our panties in a wind. For reference, BNY Mellon raised 140 something million for Fireblocks, which leverages Fetch, by the way, Fetch AI. This is dust. 16 million is dust. That crappy project that was like, which one was it that was, they wanted to trade your tokens for something else. And then they were like, we're having our private sale, World Mobile Scam token or whatever. They raised 40 million. And that's a clear Ponzi scheme. So anyway, whatever. All right. So now big time investors have jumped in. They've aped in, one might say. Software developer Alethea AI, which created the world's first intelligent NFT, just secured 16 million in funding via private token sale to create a metaverse populated by its bots. This is actually pretty interesting. I'm going to go and play with this if they ever get it out the door. But in the next paragraph, you'll see why I think they won't get it out the door. Because there's a couple of red flags. 3 of the 6 companies are huge red flags. Lead investors in the token sale include NFT fund Metapurse. I'm okay with them. Here's where it gets sketchy. An investment firm, Crypto.com scam, as well as billionaire investor and 503 gateway error, Mark Cuban scam. Well, not scam, failure. Dapper Labs, cool. Bitcraft, don't know anything about it, but apparently they're yelling at us because it's all capitalized. Galaxy Interactive scam. Spermian, I don't know. It sounds like something you shouldn't say in public because it relates to a sexual act. And LD Capital, which actually is okay. So of the 6-7 companies they mentioned, 2 of them are absolute scammy dumpster fires, and one of them is just a failure that everything he touches turns to dust. Dang it. Why couldn't it have been someone real? Well, we'll see. An NFT, for those who don't know, is a deed of digital ownership that can be connected to just about anything, such as artwork, audio, or video content. NFTs are typically minted and stored on the Ethereum blockchain. I would say that's starting to change. A lot of the other blockchains are participating in the non-fungible token space now. But that was definitely the case a year ago. Alethea wants the NFT world to evolve past videos and expensive artwork into something with fully interactive, engaging, and autonomous agents. I like that can learn and evolve from the environment. I like that. Therefore, the NFTs that will fill the metaverse are talking intelligent NFTs. They're calling them INFTs, created by Alethea, machine learning bots that can have human-like conversations. Okay, just so you guys know, these are deep neural nets. This is not. This isn't really. This is narrow AI. There's without getting into a too deep conversation, there is narrow AI, which is essentially having a pool of comments you can call on, basically like a big corpus of data. And when someone asks this in the past, these are likely answers. And it can be shaped by the conversation, but that's not, it's human-like conversations. These are not actually intelligent agents. These are autonomous agents. They're not intelligent agents. So just make sure this is not general intelligence, by the way. These guys are not competing with AGI or Fetch, like not at all. But it is still very interesting, right? Decrypt spoke with one earlier this year. When they say one, they mean like one of the robots, Alice, which was auctioned off in June for $478,800. The idea is that a load of INFTs with their own personalities, again, with their own ability to grab speech based on pattern recognition. So kind of mining patterns, grabbing appropriate speech and putting it. It's the same thing that Facebook has, by the way. You guys know that Facebook has a narrow AI powered bot that's just used to basically incentivize vapid consumerism. Anyway, I digress. The idea is to have a load of NFTs with their own personalities will be able to interact with each in a parallel computerized AI powered world. That's cool. Big time investors. I hate when they say that. And then Mark Cuban's name follows and you're like, oh God. Big time investors were so impressed by Alice that Alethea was able to pull together 16 million in private token sale. The tokens will let holders have a stake in the virtual world. Meanwhile, Alethea will take the cash to begin building. So they don't really have much. This is hopes and dreams and fairy dust, but it is cool. And it's a peek into what the future might look like. And then their final thought is Alethea's thesis is that NFTs or their INFTs will provide a definitive property rights infrastructure for the emerging metaverse driven by interactive and intelligent avatars. And I do agree there is definitely some value in that. I think there's a lot of value in this space. And I think this is going to become much bigger. these communities where you can leverage. For instance, if you had these bots that had the entire corpus of a person's life, you know, like a Voltaire bot, right? Or a Einstein bot that had everything Einstein ever said, thought, read, you know, whatever, right? All of that data in one big pile that it could pull from. And you could have kind of quasi interesting conversations. I think that's fascinating. What do you think, Jer?
I think in a world where for so long there was chains or projects created searching for a use case, to see somebody have actual real tech and then decide to deploy it in a way like this, it's kind of refreshing. It's like somebody had an idea, they built it, now they're shopping it, right? Trying to get it funded so that they can scale it. It's kind of refreshing. It reminds me of the old days where you had to have something. You had to have something before you could raise money and build it or scale it or whatever. Yeah. So yeah, it's cool, man. I don't know what more to say about it. That is cool.
What's funny is that a lot of people think, oh, AI is here. Narrow AI is here. And narrow, and again, this gets into a much richer conversation, but basically imagine you have a big giant pool of data, past information, and a neural net kind of it grabs information and serves it that's relevant based on pattern recognition in a conversation. Now, they did an interesting test with Sophia. If you guys know about Sophia, the robot, Sophia is a narrow AI using a deep neural net and some other cool stuff. And she actually leverages a few things. She was leveraging, I believe, OpenCog, and this is from Hanson Robotics. OpenCog, which is an open source weighted labeled hypergraph system. Then there was a deep neural net, and there was another mechanism for finding. And so what it was is she would communicate. Now, they had people in another room that were actually kind of operating her. And they did this with the Philip K. Dick robot. Matter of fact, what was really funny, when they had the Philip K. Dick robot, it was the same kind of thing, right? And they actually had a voice operator, and they would pull information from Philip K. Dick from the deep neural net, and then the guy would say it. And in the other room, people were talking to the Philip K. Dick robot. And even afterwards, they brought the people in and they showed them, okay, just so you know, this isn't really AI. This is narrow AI. This is the dude. This is Rob. You were talking to Rob. The people didn't care. They said, okay, he may have been operating the Philip K. Dick robot, but I know that I was talking to Philip K. Dick beyond the grave. And they're like, right, but you know that was Rob. And they're like, no, Rob may have been operating it, but I was talking to Philip K. Dick. So the truth is, people don't care, right? If they see a human-like form, communicate with them, and in any way relate to them, and I think this is probably an analog to how people don't relate to each other in real life. And so if you have a robot face looking at you and you think for one fraction of a second that it gets you, you ascribe more human agent, you ascribe agency to this robot that you really shouldn't. It doesn't matter. People don't care.
We connected on a deep spiritual level.
Yes, we connected. And so, yes, people want to believe. So, and then this is a question that you know, not so much Charles, but that Ben Gortzel had struggled with. He's like, you know, do you fool people if they want to be fooled? How far do you go to convince them that they're being fooled when they just want to believe the myth, the hope, anyway, that we're living in this weird world, and then you can go down the rabbit hole of deep fakes and all this kind of stuff. So it's just very interesting to me where this is going. AI is going to absorb freaking everything. And again, if you can describe your job, you're going to lose it to a robot, because if it's describable, a robot will do it. So just be very careful. And if you know that you can describe your job to somebody, be open to investing in AI. That's all I will say. Okay, let's switch gears. Let's go Jerry, let's have some debt and leverage time. Debt and leverage.
Which is kind of funny to hear you say that, because leverage is nothing more than, debt.
Yeah, using debt to invest. So let's go back over what we went. We're going to talk debt and leverage really quickly to bring everyone back up to speed. So, one, stop calling me. I like how on your phone it says spam risk. Who answers that? The other one, they got me the other day. They're like, is Stuart there? I said, no, you haven't heard? They're like, what? I was like, yeah, Stuart's in ICU. Oh my God. Yeah. We don't know if he's going to pull through. Call me back Friday. Click. No sale for that guy. All right. Debt is money borrowed from one party to another. Corporations and individuals use debt as a method of making large purchases that they could not otherwise afford under normal circumstances. You use debt to expand. All right. You use debt for a variety of reasons. I don't like it when you debt finance stock buybacks, because that seems a little pyramid-y to me. Oh, and also it's part of the definition of pyramid scheme. So yeah, but that's debt number one. Debt number two, in a debt-based financial arrangement, the borrowing party gets permission to borrow money under the condition that it must be paid back at a later date, usually, but not always, usually with interest. Sometimes that repayment can come in the form of other things. It doesn't have to be money. The repayment could be in equity. The repayment could be in future services to be rendered. So don't think that there always has to be a very clear interest assigned to a debt. It's not always the case. But typically you're extending money to somebody, like what banks do. They want a little taste. There may be origination fees. It may look like a free loan, but there may be fees associated with it. One way or the other, they're going to get paid for the service of extending you that debt. Number three, bam, debt can be classified into four main categories. Secured debt, right? What would that be? That'd be like collateralized debt.
A mortgage on your home.
Yep. Unsecured debt. Which looks
your
a lot
Visa
like
card, your cash advance on your Visa card.
Mm-hmm. Your revolving stuff, your credit cards. Revolving, which could also, in that case, you could have
JC Penney card, right? Yep. Where they just have you pay down, you've got a ceiling, you can borrow up to that, or they even have revolving credit lines on homes called HELOCs and things of that nature.
Home equity line of credit is a good example. Mortgaged. So those are the four: secured, unsecured, revolving, or mortgaged. And some of those cross into several categories. You could have an unsecured revolving line of credit. You could have partial, like HELOCs. It's a revolving line, right? But isn't it? It's also secured in many cases.
They've got a lien on your title, just like they would take a second position to the first mortgage. You bet.
Mm-hmm. So corporations issue debt in the form of bonds to raise capital. So corporate debt, unfortunately, when you get into corporate debt, you get into a whole rating system. And we'll talk a little bit about that as we kind of dig into this. But it's just important to understand there is a difference between just pure debt and leverage. Now, leverage does equal debt. Debt does not always equal leverage. There are poor, well, let's just say there are tactically poor uses of debt, and then there are very clever uses of debt. And depending on where you sit and your risk aversion and your predictive capabilities, you might use debt in a leveraged way to expand your investment thesis. All right, let's talk about leverage. Leverage refers to the use of debt, which is those borrowed funds, to amplify returns from an investment or project. Investors use leverage to multiply their buying power in the market, right? So if you give someone 2x leverage and they have $100, you now gave them, you gave them another, $100, $200 they can now invest and they can expand. The problem is you're multiplying out the volatility. We'll get into the brain of it in a second. And Jerry's used leverage a lot, really much more than me. I use leverage in one specific case, which that'll be my case study, and it paid off, but there were only a few reasons why I felt safe doing it. There were many reasons why I shouldn't have done it, And there was a few reasons why I felt like this is the one time I should do it. I did it. It worked. I stopped doing it. I felt like I beat the universe. It felt a little bit like gambling, and I decided to not do it anymore. Anyway, that is leverage. It's the use of that debt to amplify returns, and essentially by expressing your investment thesis with more money than you have. Growing a business, you go into debt, use some leverage. Buying a house, you go into debt. If it's an investment property, that's a form of leverage. If not, it's basically shorting the dollar. It's a different process. It should be a different mental process. Let's talk about companies. Companies use leverage to finance their assets. Instead of issuing stock to raise capital, companies can use debt to invest in a business operation in an attempt to increase shareholder value. That's when it gets kind of gummy. Stock buybacks are a Ponzi scheme. It's not real. And there are all sorts of perverse incentives wrapped around that. We won't go too deep into that unless it comes up in the normal discourse. All right, Jerry, when you're explaining debt and leverage to somebody, give us an example. I'd like to see an example of how you use leverage pretty successfully.
Those are two different things. Which one do you want me to do first?
I want you to, well, we all know about
Explain.
debt. You swipe a credit card, that's debt. But you actually created some leverage with Nexo.
So what I did was I collateralized my portfolio, okay? And I looked at it just like anybody would look at buying a house, right? You're buying a house. The house has a value of this. Well, I need to borrow this to use it, right? So like if you own a home and you're taking a second mortgage, or you own a home in cash and you're taking a first mortgage, you've got an asset that's got a real world value. I can borrow up to X amount. I picked a spot on the scale that I did some math for that said, even if I get this kind of market retracement, I will withstand the shakeout. So I did that. It allowed me to buy assets that I then put right on my platform to add a security for me so that in a volatile market situation, I would not be liquidated. But it's really interesting because it's really no different than a house. Here's the difference. When you buy a home and you take a mortgage, your loan, every factor of your loan is determined on a dollar amount that's established upon a price appraisal. That's not the case in crypto. In crypto, you have a mark-to-market asset, which means its price or value is constantly changing. When you're in the mortgage game, the price of the mortgage doesn't ever change. It doesn't. It's set on sale or upon appraisal, and then it never changes.
Now that's like a fixed. There are adjustable rate that have a teaser rate, right?
Now that's rates on the mortgage, but the value of the house doesn't change up and down.
Until
you can get into an adjustable.
Until a refinance, right? And that's when it would be
until you reappraise it,
right,
for a new loan contract. That's the interesting thing. And people got to wrap their minds around, if they're going to use their assets and leverage them, like you say, they have to understand that it's like it's a constantly moving target, because the price, the value of your collateral is constantly flying up and down. But the truth is, it's not that different than what's going on in the real world with people who buy treasuries, right? They buy treasuries because it can become collateral if they need liquidity in the future, right? But you and I both know in the bond market, that's a moving target also. The yield associated to the bond may not change, but the value of the bond will change relative to new credit rate, new credit
conditions,
rates, new
right,
rates, conditions, etc. And so they've been dealing with this in the bond market for a long time. Find somebody who's good in that world. I guarantee they'll be good in this world with the borrowing against crypto thing.
So tell me this: when you set this up, you use Nexo, okay? So you use Nexo and you said, all right, I'm willing to go how deep? How deep were you willing to basically go into debt to create that leverage?
Right. So here's the parameters. Let's say I had $100,000 on Nexo. I took 20,000. So I took 20% of the value that was on Nexo and borrowed 20 grand. Took the 20 grand though and bought something I could put right back on Nexo, reducing that percentage even further, or adding insurance.
So you purchased assets again at Nexo with that kind of 20% that you borrowed, and you made sure that those assets returned a higher percentage than the loan service, the debt service, right?
Correct. So if I could borrow it 5.9 and earn 6, there was a interest arbitrage in my favor that had nothing to do with the capital appreciation of the underlying asset, just on a rate basis.
So this could be looked at as kind of leverage to gain an interest rate swap arbitrage.
Knowing there's an underlying capital appreciation element, which is obviously why I did it. I didn't do it for 0.1%.
Right.
But that didn't hurt.
What, if I may ask, what assets at that time, and again, these things change all the time. There's never going to be a
Bitcoin and Ethereum.
Bitcoin and Ethereum. So you borrowed against Bitcoin to buy Ethereum?
I borrowed against Bitcoin and Ethereum to buy more Bitcoin and Ethereum.
Interesting. Now, let's talk about that. So if you borrow against an asset, and these are volatile assets, and you use it to purchase more of the volatile assets, what have you done? You've increased volatility.
No, because the one factor you're not putting into the equation is the quantity, right?
Right.
The 3 factors of this are the mark-to-market asset, the interest you pay, and the interest you earn. Interest you earn is set. Interest you pay is set. Mark-to-market price or value of the collateral is the only thing changing. But you have to factor in that now more assets are coming. So instead of having 1 Bitcoin, I have 1.25 Bitcoin, which decreases the actual loan to value ratio, which then skews all the math. It's kind of an ongoing hamster wheel, but
when you take an asset that's volatile and you borrow against it and buy those exact assets, you've increased the per asset volatility now, because part of that is leverage, that leverage has a multiplier effect on the volatility. Because, for instance, if you had, like they do on Binance, or you used to do, by the way, you could get 125x leverage. But if you took 100x leverage, you took an asset where there was no way to get liquidated. And now if there's a 1% move down, you lose 100%. So you've increased your volatility and your exposure. And because you've done it through leverage debt.
In margin, you're absolutely correct. In my scenario, not so much, because I continued to reduce the loan to value ratio, which my exposure to the volatility reduces with the quantity of the asset that I'm putting on the platform. Because I didn't change the fact that 0.75 Bitcoin was being collateralized.
Right. But you took, let's just say it was a Bitcoin. You took a Bitcoin that has a volatility of X. You borrowed 20% against that, which means you now have 1.2, but you now have that much more volatility because you've increased your position and you've increased the potential for some kind of liquidation event by that percentage.
But you're not factoring in the asset coming back to what I bought, coming back to the asset.
Well, that's
earning interest
reducing.
in it.
Yeah,
but it's reducing. It's not increasing. It increased from 0 leverage to some leverage. Oh no, absolutely.
Yeah. So I'm just saying, people need to bear in mind that when you borrow, especially if you borrow in assets that are volatile, you're increasing volatility and exposure. You're going
People
from
should not do it. Now, there's another game, and I'm just saying. I mean, I did it, dude. I have nothing. I'm not Nick Black.
Well, you don't have nothing now.
No, that's true. Well, I don't have nothing now because I had to get creative.
Now
but
you
the
have
point
something.
is, the point is, if you were going to do something that was teachable and repeatable, right, that had some real merit. Today, if you took a Bitcoin and you borrowed 20% against it, you load it up on USDC, put USDC back on the platform to earn a commensurate higher rate than the rate of your loan. So if you got a loan at 6% and you can earn 10% on your USDC, that is a true that's a true interest arbitrage. You know what I mean? And because USDC have zero volatility relative to these other assets, then its stabilizing effect on your volatility range diminishes even further. And because its loan to value ratio will never change, there is no, I mean, you know what I mean? I've done a bunch of math models, and there are ways that if you want to eke out 3%, if that was your goal in life, to have a pretty steady 3%.
So I got my VIP guy over at Nexo hit me up and said I could borrow just shy of $5 million. And I think it looks about like the same. It looks about like 5 and change % is what it is, because instead of paying, you don't service the loan, they just bake it into the very beginning. So if you borrowed, like, I think it was actually 5.5 million would cost me 300, and the fee was like 330K.
Dude, did you tell him, hey, my guy at Fidelity's got me at 1.75. If you can beat that, we'll talk.
No, you know what I said? I said basically what you guys are doing is extending 70% loan to value. That's the same thing that Salt does, but at least with Salt, I can take the assets off of Salt and go park them somewhere else. It's more of a traditional loan. I like what they're doing at Nexo with the private client stuff, but they're just hitting you with fees in the beginning, and they also let you originate your own loans against your collateral. But in those situations, you own the asset on their platform and it can't leave the platform. So it's not a true loan. It's a proxy. It's just margin. It's margin.
It's super margin.
Yeah.
Now there will be there. I think it's all coming. I think mortgages are coming. I think established fixed deals. Obviously, all the ratios will be completely different than the real world because of the nature of the volatility of the market, but it'll just be a ratio game. You know what I mean? So instead of being able to take, like, people can buy put 5% down on a home, FHA loans, you can put 5% down to get a mortgage. If it falls within a certain range, like 350,000 or below, a traditional 10-10-80 or a 10-90, so 10% down, 90% loan, or 10% down, 10% second mortgage, 80% first mortgage, that type of thing. I think you'll see that only skewed to the other way. Like, you could take a loan for 40% of your assets if you lock it up.
What I would recommend,
but you still own it. You still own it. Do a multi-sig thing.
The way I'm looking at this is, in this space right now, that's not an option that I would entertain. Not what you're saying, I'm saying, period. I'm not going to take leverage at all, period, because this space, there's so much embedded, embodied leverage in the crypto space. These assets are just exploding in value, especially the good ones, right? Quality assets. So to me, it's not worth risking losing even $1 due to some kind of catastrophic unwind because of all the stress involved and all the management involved in the fees and the thises and the that's, and the fact that if you buy quality assets and the market expands, you get some pretty wicked expansion. So when you start taking on leverage, you start to become a gambler, and you're gambling that the asset is not going to have some catastrophic unwind, some degenerate. And we saw it early this year a couple times when the 125Xs on Binance and Bybit, Bitfinex, these other things, they unwound hardcore. Exchanges stole from you. And I say exchanges, I really just mean Binance and Deribit. And you had you had a bunch of people getting liquidated, and they had no recourse if it was a scam. So for instance, like it came into the light that several times that that Binance would basically over liquidate people and just say, yeah, your account's gone. And they would say, but the price didn't drop. They're like, yeah, well, it's gone. It did. You just didn't see it. They're like, what? Yeah, it's all gone. Gone. And so that's the problem is I don't want to be party to that. So I think in this space, you have to really be confident, really know what you're doing. And even then, I personally don't like leverage. I don't tell any of my clients to take on leverage. All the leverage we want is already in the space. And that's my final thoughts. Jerry, your final thoughts.
I think everybody should do what they feel is best for them, right? I took a shot. I'm trying to rub 2 nickels together to make a quarter. So I have no regrets whatsoever. And I've tried to show people a ton of times the exact thing I did and what my concerns were. And I'm relatively conservative. But the truth is, if you don't need to do much, this industry this space is exploding. You can just put your dollar in every Friday, put a dollar in 5 years, you're going to be fine. I mean, you won't be wealthy, but you will not have, inflation wouldn't have hurt you. You will have appreciative compounding effects. What more do you want? Isn't that what this really, Bitcoin, the whole ethos is just sound, safe money at the end of the day?
And also real quick, don't take investment advice from us. Don't take any advice from YouTubers, period. Just be very careful about your inputs. Your inputs equal your outputs. Take in information that makes you ask questions. Keep asking questions. At the end of the day, you have to live with your own decisions. So do what makes sense to you. Don't do what makes sense to me or Jerry or anybody else. You're the one who has to live with your decisions. Whether you win or lose is in direct proportion to your ability to either A, get terribly lucky, or B, do research and make sound decisions. And luck is not a strategy. All right. We bid you a fond farewell. Fare thee well. Enjoy your day. And as always, don't do anything my poor, insolvent, drunk, strung out on meth grandmother wouldn't do. And she's smoking water again. So she's got those formaldehyde dipped them weed cigarettes. She said she's summoning demons or something. I don't even know what that means, but grandma.
Hey, this is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, you talking to the Prophet? Hey. We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them high roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Prophet to get some profit, we couldn't change the top. If it's a stock and I need a cop it, I wait for him to drop it. Ain't no option, let's get it poppin'. We chillin' in the trap. I need some crypto, put it in my pocket by any means I rock. This is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, you talking to the Prophet? Hey, you talking to the Prophet?
It's all fake news. It's phony stuff. It didn't happen.